Ladies and gentlemen, welcome back to the channel. In today's episode, we are going to be going over step by step my opinion on what is going to happen for markets and for Tesla stock this week and why. We also have new details emerging from the trade talk consensus that was reached in Malaysia over this weekend. This is what has crypto moving higher and presumably stocks to follow suit in the coming hours. The details of this sound really good. So we're going to get into that. And again, my thoughts on this week, your major events and catalysts, and really why I see a massive rally starting. Like, this is one of the cleanest clear-cut calls I have been able to deliver to you guys in a very long time. At a time in which a lot of Wall Street is still bearish. A lot of retail is still bearish for the wrong reasons. I'm giving you a little bit of a heads up on what could be the most aggressive rally a lot of you have ever seen. Okay? And honestly, like, this is going to be one for the books. Okay? Hit the like button as well as subscribe to the channel if you have not done so already. Check that link out down below in the description of today's episode if you want to come join the trading community. What we're doing is going out, finding the AI stocks, the robotic stocks, the energy stocks, the quantum stocks, the biopharmas, you get the idea, that are under the radar, okay? That Wall Street is just kind of ignoring. They're smaller companies, not a lot of analyst coverage, not a lot of retail investors that are a part of them, okay? We've had many of big winners before. I've listed them here on this channel plenty of times. But there's a bunch more that are in the works right now that are going to become much larger companies in the future. That link is down below if you guys would like to come join us. But with that said, let's get started. Khaleesi, I need you to be quiet, okay? Watch YouTube. Okay, now let's get into the specifics around this U.S.-China trade consensus that was reached over this weekend and the details that are going to have Wall Street excited. Now, this is not really the thing that I'm super bullish on over the next 3 months, but it definitely adds to the bull thesis, okay? It says, quote, U.S. and China officials reach consensus on rare earths. Tariff pause for Trump and Xi to consider. It says top Chinese and U.S. economic officials on Sunday hashed out the framework of a trade deal for U.S. President Donald Trump and Chinese President Xi Jinping to finalize that would pause steeper American tariffs and Chinese rare earths export controls and resume U.S. soybean sales to China, U.S. officials said. U.S. Treasury Secretary Scott Bessent said the talks on the sidelines of the ASEAN summit in Kuala Lumpur had eliminated the threat of Trump's 100% tariffs on Chinese imports starting November 1st. Bessent said he expects China to delay implementation of its rare earth minerals and magnets licensing regime by a year while the policy is reconsidered. Chinese officials were more circumspect about the talks and offered no details about the outcome of the meetings. Trump and Xi are due to meet on Thursday on the sidelines of the Asia-Pacific Economic Cooperation, the APEC summit in South Korea, to sign off on the terms. While the White House has officially announced the highly anticipated Trump-Xi talks, China has yet to confirm that the two leaders will meet. Bessent told reporters, quote, I think we have a very successful framework for the leaders to discuss on Thursday. He and U.S. Trade Representative Jamieson Greer met with Chinese Vice Premier He Lefeng, top trade negotiator Li Chenjiang, for a fifth round of in-person discussions since May. Bessent said he anticipates that a tariff truce with China will be extended beyond its November 10th expiration date, and that China will revive substantial purchases of U.S. soybeans after buying none in September in favor of soybeans from Brazil and Argentina. U.S. soybean farmers, quote, will feel very good about what's going on, both for this season and the coming seasons for several years. Once the deal's terms are announced, Bessent told the ABC program this week. Greer told Fox News Sunday that both sides agreed to pause some punitive actions and found a path forward where we can have more access to rare earths from China. We can try to balance out our trade deficit with sales from the United States. There has been some Chinese caution. China's Li Chenjiang, the top trade negotiator for China, said the two sides reached a, quote, preliminary consensus and will next go through their respective internal approval processes. Quote, the U.S. position has been tough, Lee said. We have experienced very intense consultations and engaged in constructive exchanges in exploring solutions and arrangements to address these concerns. Trump arrived in Malaysia on Sunday for a summit of the Association of Southeast Asian Nations, his first stop in 5-day Asia tour that is expected to culminate in a face-to-face with Xi in South Korea on Thursday. From what it sounds like, although not 100% confirmed, it does seem like this is going to be approved, and we're not going to have those 100% tariffs put on China on November 1st, which I didn't expect that. I don't know how much Wall Street expected that. There was definitely some hedging or some concern around that because it's just such a big catalyst, right? A potential negative catalyst. Having a 100% tariff on China on top of the 50% tariff, it's impossible to do business in China. That is effectively a trade embargo. That has some pretty severe consequences for the U.S. economy if that were to last for a long time. Okay? So hedge funds and institutions, they've been a little nervous because of this. Well, now that it looks like it's not going to happen, that could fuel some risk on activity in this upcoming week. Now, I really don't want to beat a dead horse with this one, but the big catalyst for this week is earnings. Specifically, hyperscaler earnings and what they say about AI, okay? That is the catalyst for this week. That is the big catalyst. That's like catalyst number 1, okay? Catalyst number 2 is the Fed and or this China news, okay? Both of those are pretty similar, I think, in potential, bullishness, okay? But earnings is number 1. Now, we'll get into the Fed in just a moment, but earnings are really going to be on Wednesday and on Thursday for your hyperscalers. Here's the deal. There is a 99% chance, in my opinion, that hyperscalers beat earnings, they do well, and they have positive things to say around AI. That they raise CapEx budgets or keep them the same. There's maybe a 1% chance CapEx budgets start to come down. There's almost a 0% chance of that. Why? Because there's so much competition in AI. If these companies do not spend, they will lose market share to other companies, right? Google is in the fight of its life right now to keep its market, which is search, okay? Same is true for Microsoft, Amazon, Oracle. They're trying to keep their data center business, their cloud businesses, from going to other companies, okay? This competition is going to fuel massive investments for many years to come. As I talked about in the last video, in data centers, there's only 1% vacancy rates, okay? Which is insane. The demand is huge. It's massive because so many people are starting to adopt AI. Now, here is the basically dead giveaway on why markets are about to go through a very aggressive rally. This is the VIX EQ, okay? This is the VIX equal weight, okay? This basically measures single stock volatility, how nervous people are for single stocks, okay? Versus the VIX, which we know is volatility in the index, in the S&P specifically. The VIX is back to the levels it was at on October 8th, okay? October 8th, the VIX was at $16.30. Today, it's at $16.37. It's back to where it was on October 8th. But equal, stocks that the equal weight is not. It's still very elevated. And specifically when you look at like September 3rd through the 8th, the VIX EQ was in the $30 to $31 range. Okay, today it's at 40. If you look at the VIX during that same time frame, the VIX was 15, 16, roughly where it is today. So the spread between index level volatility and single stock volatility is at a record. Normally they're pretty much in parity, right? Normally, like, you'd expect, if people are fearful of single stocks, they're probably pretty fearful about the index as well. Right now, there's not a lot of fear around the S&P index, but there's a lot of fear around single stocks. And it has to do with earnings. Now, I'm not the first one to point this out. I actually heard this on CNBC from some woman. I think she was Chinese or Korean. I don't know. It was a little bit hard to understand her. But I got the gist, okay? Volatility is elevated in single stocks because Wall Street is nervous around AI earnings, okay? What's going to happen once the news comes out that these companies are keeping their AI, CapEx going and things are better than we thought from an AI perspective? Volatility is going to collapse, okay? Why is that important? Well, you can think about volatility as kind of the opposite of logic, okay? From a hedge fund institutional perspective. Who moves this market? It's not retail investors. They definitely can amplify things or help support the downside when that comes. But retail does not move the markets. It's less than 20% of buying activity. It's institutions, it's pensions, it's hedge funds, okay? That's the cohort that moves this market. Well, institutions, hedge funds, pensions, when volatility goes up, they start selling. Okay? If stocks sell off, they start to sell. They start to hedge. Retail investors, when stocks sell off, they start to buy. Okay? Not Wall Street. Not the big money guys. They start to sell. Okay? This is why they underperform the S&P, okay? It's simple. They should be buying if stocks fall. That's not what they do. Okay? Why? Because everyone on Wall Street has a little bit of PTSD from '08, depression, okay? People don't want to blow up all of their clients' money if we go into a multi-year prolonged downtrend, okay? So from a hedge fund and institutional perspective, if volatility picks up, they sell stocks. If the situation gets much worse, they protect themselves from all that downside. They can save face with their clients. That's why they sell as markets go down. Okay? So as volatility collapses this week with earnings, as we get the Fed that gives us another rate cut that projects another 2 rate cuts between now and January, so 3 rate cuts between really now, this week, and the end of January. The Fed that possibly ends quantitative tightening this week. That's JP Morgan's thought. You're in a situation for massive upside in this market that likely extends into 2026. So we honestly have the most perfect setup that you could honestly even want, okay? You have big tech earnings that are going to deliver an upside surprise. Volatility is going to collapse and Wall Street's going to start buying either automatically from an algorithmic perspective or from a human psychological perspective. People are going to say coast is clear. We want to buy stocks, okay? Earnings catalyst is gone. We also have the Fed on Wednesday, which is going to cut rates and probably end QT. That is very bullish. Historically, in the last 10 weeks of the year, the S&P goes up 4%, let alone all of these other positive catalysts. So that's 3 strong reasons why the markets are likely to rally from here. But you also have the news we covered at the beginning of this video. 100% tariff threat is really no longer existent, okay? That is 4 big catalysts. And the 5th catalyst is likely getting back to trade negotiations with Canada. Okay, Canada started running some Ronald Reagan ads. The Trump admin found out about it. They paused trade deal communications with Canada. Trump put in an extra 10% tariff on Canada. But Canada now paused the ads, okay? And they said they're ready to get back to the table and work out a deal whenever Trump is ready. So those are really 5 big catalysts between now and year end that are going to fuel this market. Like, if the government reopens, that could be the 6th catalyst. I don't think you need that. I think stocks can do just fine even if the government is shut down, because I will also mention this week we're going to get a lot of earnings from that will tell us a little bit more about the consumer. SoFi, PayPal, UPS, okay, Avis Budget Group, Royal Caribbean, JetBlue, okay, there's probably others. Etsy is going to tell us a little bit more about the consumer, okay, Rocket, it's going to be a big focus, and we're starting to be able to put the picture together here on how the consumer is doing, and it doesn't look terrible. Visa, put Visa in that. Visa is going to be massive. What do they say about the consumer's spending behaviors? Okay, so even though we're not getting government data right now, we're getting earnings that are probably better than government data in actually evaluating how the consumer is doing. Now, specifically when it comes to Tesla, I think we're going to have a good week this week, okay? I think we have room to rally to about $500 a share. Could we rally more than that? Of course. But November 6th is a big date, and we want to hear what BlackRock and Vanguard say about the, compensation package. Okay, are they going to vote in favor of that? Are they not? If we start to get larger investors that say, hey, we're going to vote for Elon's compensation package, Wall Street might start to price in a higher probability of the package passing and, give the stock a little bit of credit for that. But November 6th is such a big catalyst that, there is to some degree a lid on Tesla until November 6th. But that does not mean Tesla can't rally, especially if the markets rally. I would expect Tesla will rally. Now, to get to $500 a share from here would be upside of about 15.5%. I think this week, by the end of this week, you're going to be flirting with all-time highs. Okay, to get to all-time highs from here would be a move higher of about 12.5% or so. Now, do we find some resistance around there? Do we get a little bit of rejection around there? That's possible. Now, Tesla's chart looks really good. We've had blowout deliveries recently. From my perspective, we had blowout earnings. They were really good. And there's definitely momentum to be worked in Tesla and to give us that upside. But it's after November 6th that things are going to get crazy. Imagine this market is going through just aggressive upside over the next 3 months, and then we confirm that Elon is going to be the CEO at Tesla for 10 years. Now, I don't know about you guys, but that's going to make Tesla's stock go absolutely crazy. That's where I could see Tesla being a $650 stock by the end of this year. Tesla could be a $2 trillion market cap, around $640, $650 or so by December 31st, as long as Elon's compensation package does get approved. But the reason why there could be a little bit of volatility before November 6th is because if Elon's package does not pass, then he may not be the CEO of Tesla in the future. Now, again, as I've said before, I think the board and Elon will figure out a way to make it happen, to get Elon the voting power, to get him a new compensation package. But the initial reaction, Wall Street is going to be like, oh my gosh, what if Elon steps down? That's at minimum going to give you 20% downside on November 6th. Now, good news is I think there's only a 5-10-ish% chance that actually happens. Like, why would you not vote for the compensation package? Like, are you crazy? Like, you have to be a hater at that point, right? You have to be a hater to not vote for the compensation package of Elon Musk. You just have to be, right? Because you're looking at like 800% upside if Elon comes through with, the performance based package, right? You're looking at Tesla at that point being an $8.5 trillion company at minimum, which could exceed, as Adam Jonas says, $12 trillion if Elon and Tesla actually hit all of the tiers of that compensation package. You are an absolute hater if you vote no for this package. Like, it's a very low chance that a no vote will actually happen, but it's still possible, and that's why Wall Street might be a little nervous before November 6th. But as that package gets approved, after November 6th, into the end of this year, Tesla could be a leader in this market. As really people start to focus on, the AI prospects at Tesla. Like, boom. Now Elon is at Tesla for 10 years with a performance-based compensation package to send Tesla to an $8.5 trillion valuation, probably higher than that. What happened the last compensation package? The second that thing was approved, you should have put all your money into Tesla stock in 2018. Okay? You would have made a fortune. And I think Wall Street believes Elon is going to get it done at Tesla. But just mix that with the kind of aggressive rally that I see coming, and it's game over for the bears. Like, Tesla's going to a $2 trillion market cap by the end of this year. If, again, the package is approved, and if I am correct on the broader market rally that I see coming. And really, in my opinion, there's no way to avoid that at this point. This market is about to go parabolic. Tomorrow is going to be a really good day for markets, but it's just the start. Once you get through big tech earnings, once you get the Fed, oh baby, volatility is going to collapse. Money is going to start flowing into stocks, specifically the AI stocks. The areas that have sold off recently are going to see the largest upside. So let me know your thoughts on all of this down below in the comment section. Hit the like button as well as subscribe to the channel. If you guys want to come join the best investing, really, I say trading community, it's more like investing. Sure, we take short-term trade opportunities as well, but really we're taking a medium-term time horizon on these stocks. We're making decisive investments in companies that are overlooked by Wall Street, that don't have a large retail investor backing, where they're not hyped. You're getting these stocks at sometimes dirt cheap valuations. I own one stock right now that is trading at less than 3 times sales, that has already given 2026 guidance to grow at about 300%, and it's trading at less than 3 times sales. It's the cheapest AI stock on the market. I have $160,000 invested in that single stock. It's a literal no-brainer. Okay, those are the kind of stocks that are going to do exceptionally well over the next 3 months. So come join it. Link down below if you guys would like to. If you want to get $100 in totally free stock, which I view over the next 10 years as like $1,000, because AI is going to balloon your wealth over the next 10 years, check that link out down below for public. Get $100 in your choice of free stock when you sign up and fund your account with $1,000. But that is it. Have a great rest of your Sunday. I would say go Lions, like we typically do, but frickin' bye week. How sad. But yeah, have a great football Sunday, and I will see you in the next one.